SMF MMTs, welcome to the world of Texas Instruments. They beat by 2 cents. They beat on revs, both in line with narrowed guidance. Again, narrowed guidance. Guidance, Q4 EPS in line, revs in line. So the thing about this particular name is that we don't have a trade on it. Because we don't. So therefore, what we're going to do is take a look at how Texas Instruments has been leveraging their business in this earnings report. And hold on one second. Sorry, MMTs, for the interruption. 2 cents better than Reuters at 69 cents. Revenues rose 29.9% year to year, $3.74 billion versus the $3.69 billion consensus. Now, you got to like that. So basically Q3 operating margins of 32.8 versus 32.8. So they're right there in line with that on the operating margins. Q4 sees EPS of 59 to 67 versus 63. What does that mean? Well, think about it. It's an EPS, earnings per share, of 59 to 67 versus 63. 67, 4 pennies above the high end, and then naturally that 59 is slightly below. That's that low end. Okay, Q4 revs of 3.63 to 3.64 billion versus, here's the thing, 3.51 billion was Thomson Reuters consensus. So basically the street MMTs, this is where the strong part of it is as well. Okay, and it's good for the semis. What it tells me is that the semiconductors, and there are very different sectors, but they're not, it's not going to implode, and it won't have an effect on the pre-market futures in the morning. Let's take a look at the R&D expenses of 1.6 billion. Now, it's up from the prior expectations here of 1.5 billion right here. So let's take a look at the capital expenditures of 1.2 billion versus that depreciation of 0.9 billion. The demand from industrial markets was especially strong. Industrial markets, they're spending money. That's good for the industrial sector because they don't spend money unless they're making money, and their productivities must be in the right area. Okay, while the consumer demand cooled, which it did, we all know that happened over the summertime of 2010, impacting markets such as computing and televisions. Well, hell, we know what happened with CREE, C-R-E-E, in the lead market. Okay, across in a lot of different markets, but they're and our analog and embedded processing products and wireless smartphone chips. Here's the key, MMTs, right there. Wireless smartphone chips continue to gain share. That's because of people that have these smartphones, like the iPhone and the Research in Motions of the world and other people that have them. Guess who they come and get them from? Texas Instruments makes it. That's their bright spot. That's why they're up. Okay, as we move into the fourth quarter, we expect sequentially lower revenue, reflecting a combination of seasonal patterns, continued soft demand in computing and consumer markets, and slowing growth in the industrial markets. Now, the key about this, MMTs, is they're saying that things are going to be slower going into 2011, if you ask me. Compared that everything is in line, but what are they saying in the key statement as we start moving through the rest of the earnings season is we're going to be looking for these statements, MMTs. Because once again, if you have a lower growth, a lower rate of growth at your GDP, productivity, and all of the economic indicators that you're taught about, it's all going to fit together in here, MMTs. So basically, even though that stock prices and the markets are in great bull, I didn't say bull market, I said bull trend rallies, that moving forward, these rallies can easily come back and go down very quickly. And the thing about it is, as we do our planning, is it's very, very important that we look at where the various different sectors around the world, various different sectors in the U.S. economy, and what that R&D cost is, and exactly what they're talking about here, lower revenue reflecting a combination. So there's always seasonal patterns, as I've always told you. Other parts of the economies or sectors of the economies are strong running, and there are other parts where things can be soft, and that's a good thing about being an MMT, is knowing where to be and all the reasons why. And as part of your MMT training, it's very important that you're really focusing on the key elements here and what they really mean. And it's my duty and my job to make sure that just outside of you making money in your MMT trading platform every day, but you're diversified in other different types of things that markets do and what markets look at and what growth we'll be looking at going in 2011. So we're not buying this one for now, and the thing about it is it's not that good of a statement, but we already know this. The market knew this when we started to rally September 1st. And we've rallied all of October, but they've known this very same news already. And totally the market's discounted a lot of it. And basically, this could be a sandbag, meaning that the CEO was, hey, look, let's look at the worst scenario if things don't pick up, versus painting a big picture like Intel did that gave that upside guidance and then had to come back 3 weeks later and lower it. Basically, the report's good, it's in line, they're being upfront, they're telling people where they're at. Now, as far as trading it, well, it doesn't really move for MMTs. Certain times, certain parts of the year, you get good movements. We're not going to, you have to trade 5,000 shares to make any money on a darn thing, and that's if you're taking 35 or 40 pennies out of it, up 32 pennies on the day. A closing price on Friday was 28.66, so you're right in line at 72 by 81 pennies in the after hours, just taking away that 32 penny drop that bid. That's the earnings report, and these are things that we'll be talking about and going over. Some of you have already been through 2 quarters of earnings. Some are just going through their first quarterly earnings.